It is October 22nd. I don't know. Is it because I'm an old person now? Because I mean, that seems ridiculous. I mean, especially the month of October just flew by. So next week, there will be no webinar. I'm going on a boat trip and I'll be gone for a week. My girls are coming down, including the lovely Madeline. Hopefully the markets don't crash while I'm away, but they're getting started now, so what the heck. So apparently this is because Trump has once again said some nonsense about changing the tariff rules. Let's see. What is that with Beyond Meat? Beyond Meat, just what? Damn it. I was thinking of getting back into them too, and I just didn't see a good reason. That can't be right. B-Y-O-N. What? What are they called these days? Beyond Meat, B-Y-N-D. What are they talking about 1,000%? Well, okay. So it's 64 cents. Oh, well, that's 1,000%. There you go. I mean, this is why we didn't get, I was looking at them when they were drifting along here. I didn't know about this. I would have maybe done it, but I mean, if I knew they went down to 60 cents, but I guess somebody thought they were going bankrupt and now somebody thinks they're getting bought. But yeah, I was looking at these earnings reports and I was like, that's a pretty big miss. You know? And that's a decent miss too. And this miss was also horrific, 45%. So, you know, it's a little tricky. Let's sign into this and see what they say. See, it's like they never got it going and it's going down and they keep burning money and they don't have any money. They've got 1.1 billion in debt against a $1.5 billion market cap, and they're losing 10% of the company's value on an annual basis. There is like no reason to buy it. I wanted to. I was like, damn, what about that Beyond Meat stuff, you know? But apparently not good things. And I don't know. I don't even know why I think somebody might buy them or something. I'm not sure what the scoop is on this. As retail traders, oh, it's a meme stock now. Oh, well, that's a terrible. Oh, see, there you go. It says meme stock. All right, so that's a terrible reason to get into it. So I stand by my original decision of saying no, thank you. Wow, finally got cheap enough to be a meme stock. That's a good accomplishment. All right, what were we doing? I forgot what we were even more. Yeah. Okay, so yes, so the markets are crashing and oh, Trump. We were trying to find out about Trump. That was a sidetrack. Guys, you can't let me get sidetracked. Gold extends losses. A CEO's guide to making the most of a meme stock moment. Oh, I bet that's a good article. That sounds good. All right, let's see what we got here. More than 13 million meme coins show urgent need. Oh, you think? You think it's a little late now? And I'm telling you, 5 years ago, we talked about launching Phil coins and people said I would get arrested and we didn't do it. We could all be billionaires now with our Phil coins. That was insane. Yeah, back before COVID, it's more than 5 years ago. So before COVID, we were looking at when Dogecoin, it was when Dogecoin came out, and I was like, what a load of crap that is. And that's worth billions now. But yeah, when Dogecoin first came out, I was like, anybody can make a coin. And and I looked into it with biodiesel Chris, and we could totally do it. The only reason we didn't do it was fear of prosecution. We just could not imagine that it was legal to do what, as they show, 13 million people have now done, which is just make up money and circulate it. I mean, it does say there's some big crime. I mean, that is the actual purpose of the Secret Service, is to arrest people who try to print counterfeit money in America. That's their actual purpose, and that's not going very well. Anyway, so Trump. Oh, come on, what did Trump say? That's all that matters. Oh no, I hit a G. T-R-U-M-P. Gold. A report saying Trump is weighing restrictions on software exports to China. Software? Who cares about software? Are you kidding? That's what this is about? This is a stupid reason to sell off. They're just looking for an excuse. Just looking for an excuse to start selling. I thought they were talking about chips. They're talking about software. China does not really care whether they get our software or not, and we don't sell that much software to China. I guess we sell Microsoft to China. Microsoft might be unhappy about this. It's a big bunch of Windows computers over there. Let's see. Nope, they don't care. If Microsoft doesn't care, it can't be a big deal. All right, so what's going on? Let me see. Look, it's going to be noisy up here. We're going to get a lot of this kind of crap because we're generally oversold, which brings me around to what I wanted to talk about today. So that's going to work out. Except I'm not even logged into my own site. That's right. La la la. All right, so as of today, was there anything older to talk about? No, not really. Top trade with Stellantis yesterday, though. That's a good one. All right, so let's talk about some basics. When you see money coming out of gold and silver and Bitcoin, it's got to be going either to stocks or bonds or real estate, because there aren't that many places to put money. So a little bit went into oil, but that's not significant. And you have to just think about what's the alternative, what's going on, why are people but even so, when they liquidate, it creates a demand for dollars, right? I'm turning my gold into dollars. Therefore, I need dollars to be sucked out of the economy and placed into my bank account in exchange for some shiny metal bits. So there is more shiny metal sitting around, and there are less dollars sitting around circulating. So that you have to think of it all as like a bunch of buckets, and money gets moved from one bucket to another. And occasionally, if your GDP grows, right, if the economy grows, then somebody from the outside fills up the main pool with a little bit more water. But generally, money simply goes from one bucket to another bucket to another bucket. And one bucket is labeled commodities, and one is labeled, well, commodities are all different too, but one is labeled gold, one is labeled silver, one is labeled Bitcoin, one is labeled copper. So money's got to flow around. And then there's the petroleum money that has to go around. Then how much is going into housing? Well, not very much. In fact, I thought, oh, damn it. That's not Facebook. I saw a good chart of buyers and sellers. And if I remember correctly, there are 1.9 million sellers. Now 1.9 million homes listed for sale, and only 1.5 million people are looking for homes. So there's a lot more homes for sale than there are people looking for homes. So the money's not going into homes. And home sales is slow. That's another big thing. Let's see, not that, I don't mess that one up. Slowing home sales 2025. Home price forecast. Oh, that's interesting. Selling home sales 2025. Buyers, sellers. Why won't you expand? Ratio of buyers to sellers. Change in prices. So, well, I guess it's, yeah, I mean, you're kind of seeing it here because if you look back from 2024, look what happened though. The ratio of buyers to sellers went from, here's the weight of buyers to sellers. Yeah. So it went from 0, even, to, at the moment, we are -20. There's 20%. Well, if it's -20, it should be 60-40, right? That's about what we were talking about. So 60-40 is -20. It makes up 100. There's a 20-point gap. But the sales price of homes is also doing very poorly. It's not growing at all, and it's heading down. Why? Because there are less buyers than there are sellers by a ratio of 20%. And it can get much worse. It did get much worse in 2022. So we are nearing a point at which it tends to be a crisis. So housing market has nearly 500,000 more sellers than buyers. See, I said that. But anyway, so if you think about it, if the housing market isn't moving, then the banks who usually write checks or move money into a house, they're exchanging, same thing as gold, right? They're taking their money out of the pool and they're putting it into the house, and the house becomes an asset. And if that gets sold, then it replenishes a supply of money. But at the moment, the money comes out. Oh, that's exactly the one I saw. It's 1.9 to 1.5. But that's horrific, right? So the buyers left the market over the last few years. They got worse and worse. Sellers are trying to sell their home, but there aren't enough buyers to take the homes off their hands. And so the amount of sellers, the seller still wants to sell their homes, just nobody bought it from them, right? So it first started out where the number of sellers crashed, right? And this was because of COVID, and also because when the Fed started raising rates, you can't exchange a 3% mortgage for a 6% mortgage. It's very expensive for the seller. You know, the thing of the seller, I mean, you're selling your house. Somebody's got to sell their house and give up their 3% mortgage, and everybody had a 3% mortgage by the time the Fed was done. So everybody, and by the way, that's another problem with the economy. When you look at why are people tightening their spending, people who have a 3% mortgage have a much lower mortgage than people with a 6% mortgage. So nobody's turning from a 6% mortgage holder to a 3% mortgage holder. Everyone is going the other way. And that means any housing activity at all causes less spending power for the buyer and less spending power for the seller. Used to be if somebody sold a house, they would have free money to play with and would be able to go on a shopping spree. That's not happening anymore because now your mortgage is going through the roof on the new house. So we hit a certain point where the housing prices started going up. So as the supply of sellers went down, right? Supply of sellers goes down drastically from 2 million to 1.4. That's 33% less sellers. So as the supply of sellers went down drastically, then the supply of buyers was still high, the home prices went way, way, way up. They never corrected. So home prices went up, mortgages went up, homes got really, really, really expensive, and all of a sudden and very, very quickly, the buyers ran into a wall because rates were coming up while home prices were going up. So homes jumped in price and in mortgage very quickly. And that caused the buyers to hit a wall where they kind of fell off the shelf. The sellers, though, were still trying to sell their homes at the normal rate. So what happens? The supply of homes starts climbing, and it goes from 1.5 to 1.9. That's a 33% increase in the number of homes available for sale. The number of people trying to sell their homes, but they can't because they wiped out the buyers. So now we have a huge gap. Not only that, but at the same time, Trump is running around throwing people out of the country. Those people have homes. Those homes end up empty. So big macro problems that people are not really paying attention to. This guy is, whoever he is, but home prices shift after the seller thing shifts. Changing median prices, changing ratio of buyers to sellers. So they're showing that this is killing the pricing model of the homes. See, and this is Miami, and this is West Palm, this is where I live. This is my area. We're the best in the country, and it sucks. The rest of the country is really falling apart. We still have positive home prices. Even Jacksonville, no one goes to Jacksonville. Orlando. Las Vegas is hanging in there too. See, they complain in Las Vegas, but actually it's doing okay. The best sellers markets. Oh wait, you're saying that was the best buyers markets? Oh, okay. So Newark, New Jersey is getting the best prices, not us. We're getting the best of the worst. Wow. Nassau County, Long Island. Ugh. Look at the prices: 717, 622, 501. No wonder nobody can afford to. Cleveland, 238. It's like a foreign country. Is Cleveland that bad? Wait a minute, what does this say? Sellers, buyers. Okay, so it's true. Not many people live in Cleveland. 6,000, 8,000. Newark. What are these places? We should have much more than that. 21,000 sellers, 7,000 buyers, 18,000 sellers, and 6,000. Oh, I see. That's why they're calling them bad. This is terrible. Holy cow. Look at New Brunswick, more sellers. All right, anyway, so 83% more condo sellers than buyers. That's crazy. Wow. So this is a nice study. Here, I'm going to give this to everybody because it's a good study. Dun, 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 dun. Can I do that? No. Ah. Here you go. Huh. Why did that not work? Huh. What is the problem with? Oh, well, I couldn't send it. Sorry. But anyway, so it's here. Redfin News, sellers versus buyers, price impact. But this just gives you an indication of what's going on in the country. And get back to it. So, you just have to think of all these different pots and buckets that money goes in and out of. And so the banks aren't, the commercial real estate's picking up a little bit. M&A is picking up a lot. That's one thing the banks are putting their money into. But housing is like dead. It's just sitting there. And that means there's a lot of money sitting around doing nothing. And people are not making money on the housing market. People are not making money, particularly on bonds. They're paying a pretty poor rate of return. Bank interest is useless to people. It doesn't make any money. So there's not much choice to do but go to stocks. Then you're talking about stocks and commodities obviously became very popular this year with gold skyrocketing, silver skyrocketing. Even oil did well for a while, then it cracked. So we have to figure out like what's going to hold up and what's going to be investable and what's not going to be investable going forward. So let's take a look here. Here's energy. So energy since August has been going out. Let's look at the weeklies. So here's oil. It went down, it went up, it's down, and now it's probably going to go up again. It's down in the same place it was last time. Gasoline, natural gas has been a little bit more steady for the year. It's kind of where it started the year. On the whole, it's been doing okay this year. Bonds started out terrible, and they're improving. So they really had, they were pretty bad at the beginning of the year. But that's because the Fed had been raising and raising and raising. They killed the bond market. Now it's coming back. Here's the beginning of the year. Cocoa fell apart, cotton fell apart, oranges fell apart. Coffee is generally up overall. Sugar is down. And lumber has been coming up a little bit better in home building than you assume. But gold, holy shit, look at gold. 2,700 to 4,000. So that's 50% up basically. Silver, 32, not even 32, more like 30 to 50. That's 60%. Platinum, 1,000 to 15, also 55%. Copper, 4 to 5 is 20%. And palladium, 1,000 to 14 is 45%. So metal's doing very well. Meat, obviously exploding. Anybody who's had a steak lately knows that. Freaking annoying. Looks like bacon's coming back though. Hopefully cattle will come back too. And now Trump's doing this weird thing with Argentina. I don't know what he's up to. First of all, Argentine beef rocks. So God bless him if he brings Argentine beef into the country. But because it's still all grass fed, and they live on mountains, so they get much better exercise than our cows do. But first he screwed the farmers with the soybeans because China just said, you know what, screw you, we're not going to buy your soybeans, and they started buying it from other people. So now, even if Trump changes the tariffs, China's going to be like, why should we come back? We have our supplies are all set. We're done. We have new trading partners for soybeans. It's not a thing we buy from you anymore. It's the problem is Trump's lack of knowledge of how trade actually works and not understanding the international repercussions of what he does and thinking America is the only country on earth when we're only 400 million out of 8 billion people. We're not even 400 million, 350, 340, something in that range. So, out of 8 billion people on the planet, we're about 4%. And he acts like we're the only ones that matter. and it pisses everybody else in the world off. And it also puts us in a very stupid trading space. We're like, we're like a little pipsqueak kid on the playground who's trying to pick fights with everybody, and everybody looks down. It's like, what are you doing? It's like, yeah, we have a great big army, but that's not how you're supposed to fight trade wars. And in trade, we're not as significant as we think we are. Other countries can trade with each other. They all have essentially everything they need to get by without us. Unlike China, who has the rare earths, and without the rare earths, the whole world can't survive. We don't have anything like that. We don't sell anything like that. We're trying to get people addicted to our natural gas so that we can be in a good position with natural gas, but we haven't gotten there yet because we haven't really come up with a consistent trade policy that makes us a reliable supplier. And by the way, that goes for everything too. If we're not a reliable trading partner, then how are we going to build trade relationships? You don't trade with people who you don't trust to maintain a trade relationship. You don't, like we wouldn't have built this incredible reliance on China for rare earth materials over the last 2 decades if we didn't think China was an excellent and trustable trading partner. And we've had no reason to think otherwise until now. What happened is Trump went strictly on the monetary balance of the trade, which is not the point of the trade. Because one thing you don't look at when you look at like what China does, China sends us a ton of manufactured goods. It causes a trade imbalance, but the trade imbalance is caused by the fact that we don't want to have or we didn't until now. We don't want manufactured goods in this country. We don't want the factories and the pollutions and the low-wage jobs and the miserable lives that go along with it. We don't want companies that boom and bust and take the entire town with them like we used to have in the 30s and 40s and before that even. These are not desirable things to make to turn America back into a giant factory. We got rid of that. That's why factories got pushed. Factories got pushed from the Northeast, which was our manufacturing center, and that was in the turn of the century. We pushed the factories out west. When they started making cars, we sent them to Detroit because it was nasty, long hour, not great pay, polluting work. If it wasn't for Henry Ford giving raises to his workers and causing a wage raise competition, it would probably still have been a terrible job. But Henry Ford realized that when you're in a town like Michigan, like Detroit, and everybody works in the auto plant and you're not paying them enough money to afford a car, you're making it difficult to sell your cars. So he started paying the workers enough money to afford cars, and all of a sudden his sales went up. But then once the manufacturing in Detroit, then they had Chicago and other places in the Midwest and stuff, and then they built the Rust Belt, and Pittsburgh, of course, with the steel industry. We shoved those jobs away from the northeastern cities because we didn't want the factories. We didn't want the factories or their jobs. We shoved them all out of here. That was a decision made on the ground over a 100-year period where people who actually had experience with factories said, oh, let's get rid of those. And then finally, when it got to the 80s, we were shipping our factories out of the country because nobody wanted them. Even Detroit didn't want the frickin' factories. Factory towns didn't want the factories because they couldn't drink their water and they couldn't breathe their air. It's the stupidest thing ever. Anyway, so my steaks are expensive. I'm angry. Grains, rice got cheap, corn got cheap, soybeans got expensive, which is weird because we're stuck with them. They're going to crash, actually. Well, soybeans aren't so much, but the soybeans are going to completely crash because what we've got is going to rot on the vine, basically. Wheat got cheaper, oats got cheaper. That's pretty good. That's why Trump wants to get the CPI report out, because we're going to be showing some improvement. He'll get to crow about it before it gets all bad again when his tariffs kick in. The dollar, of course, has crashed, which has offset a lot of the gains we have in, you know, a lot of the things that got cheaper did not seem as cheap because the dollar has crashed. Our imports are hitting us really hard because of the dollar crashing. Bitcoin started the year at 100. It's 108. It's not really doing that much this year. Gold's doing way, way better than Bitcoin. And it's all about just the alternate places to put money. So gold lost $2 trillion in market cap. That's pretty insane. Gold versus other investments market cap. Oh, come on. I'm looking for one of those charts that shows everything at once. World's most valuable assets. All right, that'll do. When is this from? It's a question. October 13th. Okay, that's probably pretty. One would hope it's recent. Anyway, all right, let's take their word for it. So gold's 27 trillion. Oh yeah, because NVIDIA 4.5, that's current. Gold's 27 trillion market cap outweighs the rest of the top 10 combined. Okay, I would have liked to have, I would have preferred to have seen it. I would have preferred to have seen it versus other things. I mean, we do have silver here. Sometimes the gold is 10 times silver as a total asset class. It is also 10 times Bitcoin. And so all the Bitcoin in the world is $2.5 trillion. People are very, very unrealistic about these things. So you got gold, NVIDIA, Microsoft, Apple, Google, silver, Amazon, Meta, and Broadcom. But all the gold in the world, $27 trillion. And so when gold drops 10%, that's a couple of $1 trillion off the cap. But again, the question is, where did it come from? Right? Go, 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 go. Oh, that's neat. Metal. So from January, $26 trillion, $25, I'm sorry, 2,500, and 1,500 out of 25 is 60%. So a 60% increase in gold. So it went up 60% in 1 year. So if we now take, let's just take half and say it's $13 trillion. Where did the $13 trillion come from? At the same time, these guys were rising. These guys packed on $1 trillion each this year. Where did all this money come from? And Bitcoin flew up too, but Bitcoin's small by, you know, by comparison, Bitcoin's small, but it's still, they gained a bunch of money. All these guys gained a bunch of money. They're 26 trillion. I bet if they gained 13 trillion, they probably gained about 10 trillion. So on the whole, 23, $25 trillion, where did all this money come from? How much is all the money in the world? Oh, how much is all the money in the world? Total amount of money in the world. Broader measures like gain to 80. Okay, see, kind of anticipating here. Physical cash, $8.2 trillion. All coins and banknotes in circulation. M1 money supply. Physical cash plus demand deposits like checking accounts, $48 trillion. So what you would consider cash, your physical cash and the money in your bank that says on your ledger that you have this much money, $50 trillion. M2, the M1 money supply, this is dollars only, though. This can't be all the money. Total wealth. This includes financial assets, stocks, bonds, real estate's definition of money. Total global wealth, hundreds of trillions of dollars. Yeah, so this is America. So America, we have $100 trillion total money. Total money, $100 trillion. And where did we get $15 trillion to increase the value of the stock market and gold this year? Where did that come from? Did our GDP go up 20%? Not 20%. Our GDP is only $30 trillion. Our GDP, it's half of our GDP at least going into these assets. We would have had to grow the GDP 50%. We didn't grow the GDP 50%. We grew the GDP 4%, 3% this year. So just based on that alone, you know it's an illusion. Something is wrong, and that's why when you talk about a bubble, there is a physical limit to how much a bubble can go because there's nothing else to put in it. We aren't putting this money in, we're speculating. In 2022, they said there was 800 trillion of gross assets, including debt. Oh, please. Comprising of gross liquid assets, 55% gross liquid assets, 365 trillion of illiquid assets, deducting debt, 650 trillion of net assets, 62% owned by individuals, 38% owned by governments, less than 1% coming from endowments or foundations. Boy, we're terrible, aren't we? Only 1% comes from charities. 66% of these gross assets are allocated to asset owners. 104 trillion in assets controlled by direct investors. Blah blah blah. So you can see it's so much less than you think. I mean, that's all of our homes and all the land and everything. That's just everything. The whole world, if we liquidated and sold it to the Martians, would be $800 trillion. But that's gross assets. Then we've got to pay off debt on those assets. That would bring us down to 650. It's everything every human being on the planet is worth is 65. Well, let's see how much that works out to. Dun, 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 calculator. Let's see. So we're talking about 659, 123. That's how many billions divided by 8. $82,000 each. That's how much. That's total assets for all the people on the planet. $82,000 each. Some of us have much, much more, and many of us have much, much, much less. So you see these numbers, and I mean, that's why when I talk about these things, it seems pretty obvious to me. I'm like, how could gold have gone up this much? You have to think proportionally of what these assets really are. And by the way, I mean, you know, not to be too critical, but frankly, if you're buying Bitcoin or any of these coins and you don't know what the market cap is of the thing you're buying, then you're doing it wrong. Because you got no, how do you make a proportional decision? You know, it's like saying that you know, you get a really good batter on your team for baseball and he hits the ball 8 glorms. And you're like, oh, 8 glorms, holy crap, I gotta buy that, I gotta pay for this guy, I gotta put money into his contract. It makes no sense. You don't know what a glorm is. And that's what it is when you see Bitcoin price at $112,000. What does that mean? When you see a stock priced at $100 and another stock priced at 30 and another stock priced at 20. It doesn't mean, and you guys know this because you're all advanced investors. I mean, for the vast majority, you know that you laugh at people who sit there and say, "What doesn't make sense? Apple's only $100 and something and Google is $400, and how come that? How could that be? Apple's a better company." That's not how it works. Depends how many shares there are, right? And the same thing goes for gold. It depends how much gold there is in the world. When someone tells you an ounce of gold is $4,000 an ounce, there's $27 trillion worth of gold, and you divide that by 4,000, and that's how many ounces of gold there are. That's easy to figure, well, not easy to figure out, but it's easy to actually get to the right number. But that means that when you see somebody make a transaction for 100,000 ounces of gold, you say, "Oh, that's significant because there's only this many ounces of gold in the world, and an ounce costs this much." You've got to have all the information, not just some of the information, to make intelligent trades. And that is especially true for dollars. How many dollars are there? What is considered a large amount of dollars? How much can we keep pressing? I lost the thing now, right? Oh, no, it's still there. So if there's $27 trillion in gold and there's $26 trillion of Magnificent Seven stocks, well, plus silver, frankly, plus silver and Bitcoin, but there's only 2.4 trillion in Bitcoin and 2.75 in silver. So 5 minus 26, 21. So these seven stocks, Magnificent Seven essentially, are $21 trillion. So if they're going to grow 20%, that's $4 trillion. Where is that $4 trillion going to come from? And that's what I was talking about today. Money's got to come out of gold. These are your investment assets. The other place is a housing market. But if the housing market gets moving, what's going to happen? Houses are going to be sold. And that means that buyers will borrow money, right? They're not going to get sold for cash. Some will, but for the most part, their buyer is going to borrow money from the bank out of the big pool of money, right? The buyer has to borrow money from the bank and give the money to the home seller, who will then, instead of putting money back into the pool, will put a house next to the pool that is now pledged to the cash that was taken out. But meanwhile, the seller is the one sitting on the cash. If the seller is going to put that money into another house, it doesn't make more money. It just causes that same cycle again, where somebody else has to borrow the money out of the pool and give it to the seller. So some money will end up getting into a bank somewhere, but not a huge amount, because that's the unfortunateness of the situation now, is you're going from a 3% mortgage to a, well, let me show you that. That's an important thing. Because nobody has money when they're in a housing transaction. Everybody is just going deeper and deeper into debt. Mortgage calculator. Oh, this is a good one. All right, so I've got my home. 400,000, as we know, is already a joke, but we won't worry about that. I got a home. It's $400,000 down payment. Well, my down payment is, let's say I've paid $250,000 of my home off over the years, right? I now still have a mortgage of $150,000, and it's at 3%. It's 30. Well, it's not really 30 years because it's, oh yeah, it is 30 years. You'd still be paying the 30-year rate. Doesn't matter. Doesn't matter. Look at property tax, $3,000 a year. Not in Jersey. Oh no, don't compare. That's not what I want. I just want to calculate it. So where is this thing telling me something? Calculate. Ugh. But it's mostly trying to sell me something. It's not really trying to tell me what my actual thing costs. Oh, here you go. Loan payoff day. Oh, monthly payment. So $1,000 a month. So if you're down, that's not how it works though. All right, you start out with a $400,000 home. Let's try this. Your down payment was $40,000 30 years ago. Your loan is, there's your loan, there's your interest rate. Oh, I know that's the problem. So let's start out 20 years ago, 2005, and calculate that. Aha. So you're paying, that makes more sense. You're paying $2,000 a month. And interest paid. So your payoff date is 2035. You're paying $2,000 a month. That makes more sense. And your taxes and your total and your monthly home and your home insurance and your annual payment amount. So you're paying $22,000 a year. That's probably including all the extra fees. That makes sense. No, it doesn't. That's a higher amount. Anyway, let's remember the 2,000 part. So here you are. You've got your $400,000 house down payment, blah, 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 blah. You sell your house. And what do you sell your house for? You got to pay off the mortgage. And that's still interest paid, total home, annual home. God damn it. Must be a better calculator than this, right? Oh, by the way, it's a really important thing. Look how much you pay. You pay $700,000. It's so much more than the actual price of the home when you do that. All right, so that's 2,000. So my point is anyway, so that if you trade that in for a 6% mortgage, so you're only getting back. Oh, this will tell you. So taxes and fees, 45, interest 4,000, principal balance. You still owe $150,000 on your mortgage. That's the point I wanted to make. You still owe $150,000 on your mortgage, even after 20 years of making payments. So you pay 20 years times 2,000 a month as 400,000. So you paid off the entirety of your home in payments, but you still owe 10 more years of interest on your home. So you have to pay over 10 years now, $150,000 balance, plus there'll be interest on that balance. It'll bring it up to a couple $100,000. That's why you're still paying $2,000 a month. You're going to pay another $240,000 on top of what you already put in, because you're still paying interest and still going through. So when I sell my $400,000 home, unless I'm getting a much higher price for it, I'm only going to get $150,000. I'm sorry, I still owe 150. So if we sell it for 400, we're going to have 250 to spend. But the problem is now I want to go buy another home. And now if I want to go buy another home, and even if I'm downsizing to a $300,000 home, and I'm putting $150,000 down, what did I do wrong? Okay, but now the interest rates are 6%. Did not want to hit that. Now look what happens. Now I've got a $1,200 payment. I didn't really save any money. I took all the money from my sale of my home. I downsized my home by 25%, and I'm still paying $1,275 a month. This is why it kills retired people. Retired people are like, this is bullshit. And if you, God forbid, wanted to get a $600,000 home, which is basically the median price in a lot of the country, if you want to go somewhere nice and get a $600,000 home, now you're up to $3,000 a month. You don't have that kind of wiggle room. And that's putting down $150,000 from the old home that you cleared. And we're not even taking into account any kind of possible tax implications or anything like that. So this is why people aren't selling their homes. They can't afford it. There's no benefit to moving. They're not going to make, they're not going to free up any cash. All they're going to do is move from where they are now to somewhere else, and they're going to be in no better position. And that's killing the market. Oh, and by the way, like I was saying this, so what actually is happening here? All that's happening is somebody bought your home for $400,000 and presumably borrowed, most of the money. You ended up with $150,000 net out of your home. So $400,000 came out of the banking pool, or I'm sorry, $360 came out of the banking pool. You ended up walking with $150 of it. That's the only cash that entered the economy, is the $150, because the rest you had to give back to the bank. And you were taking that $150 and putting it right back into a deposit. It's gone, poof. There's no money added to the economy in that transaction. Because people aren't making money. My parents bought a home for freaking $60,000. That's $6,000. My parents bought a house for $60,000 when I was about 13. And when I was in college, so 7 years later, they sold it for, I want to say $300,000. They put cash in their pocket. They were able to go and buy a smaller home, which they did in Florida, for cash, and they had $100-something thousand left to walk around with. That's a good housing market. And that was where the economy, and this is into the early 80s, this is where things can start booming and money gets put into other things. And this is why my dad can sit there and go to the store and get a $3,000 VCR, because as ridiculous as $3,000 seems for a VCR, that was the price at the time. It was, everybody had walking around money from their brilliant real estate decisions. I know you've heard this, and everyone's heard this in their parents, and what geniuses they were in identifying a great home and making money, and then they very poorly have advised the last generation of kids to buy homes, which has been a disaster for them. And exactly what I'm showing you here. They're trapped in these homes, and it's because our parents just lucked out. They weren't geniuses. They didn't do anything smart. They lucked out. They bought a house at the right time because they had kids, us, at the right time in the 70s and 60s. And homes went in the 70s and 60s from $50,000 to $300,000. So every single person who bought a home in the 50s and 60s made a fortune if they held it during the time that they had kids for 10 to 15 years. They were into a massive, massive housing price increase. They all made a fortune. They all look like geniuses. It funded everybody's retirement. That's not true anymore. We now have to make very different decisions than our parents did. So anyway, so I went into this and we talked about the various aspects. Even before Trump did his thing today, how are we doing, by the way? Oh no, that's really bad. That got much worse. Oh well, look at the VIX is climbing back up. That's a yo-yo also. Wow. Dow's down 450. Anyway, so why is that? So this morning, our number one thing to worry about is this: days without changing tariff policy, 0. It's like insane. You're supposed to change your tariff policy over the course of years of negotiations, carefully thought out, voted on by Congress, discussed back and forth. Many people weigh in on it, and when I say weigh in, it doesn't mean like you go to the White House and give Trump a gold emblem and say, oh, this is from our industry, please don't hit us with tariffs. And Trump goes, oh, okay, yeah, we'll take that off the list. It's, you know, it's supposed to be balancing the benefits of placing a tariff on how it's going to affect an industry and what's your long-term goal for America and things like that. We don't do any of that. So the president is just picking winners and losers pretty randomly, and we just have to deal with the fallout. But it would be fine if he picked him and stuck with it, but he picks him and changes his mind. It makes it really hard to pick a winner. So the currencies are all over the place. It's the same thing. You don't have a consistent policy. Gold is crazy, and but all this money flowing into gold. And again, it's not really flowing in. There was never $15 trillion that flowed into gold. It didn't exist. The global economy, let alone the U.S. economy, didn't grow that much to make gold that much more valuable this year. Now, the dollar got 10% less valuable. That by itself added $300-something to the price of gold, because the gold is priced in dollars. So there's $300 right there, is that we're buying the gold with weak currency. But the rest had to come from other places in the market, and it doesn't really, it's just that the very small amount of buyers who do purchase gold have a lot of leverage. And by the way, and that leverage can become very, very dangerous on a pullback. And then you got Bitcoin, the same thing. All this money's going to Bitcoin, but Bitcoin, again, it's nothing compared to gold. That's why you guys hear me talk about, I'll talk about gold a lot, and I hardly ever mention Bitcoin. It's not significant. It's only as significant as NVIDIA. It's not even as significant as NVIDIA. It's as significant as Google. Its significance in finance is the same as Google. It's $2.5 trillion. It's not enough to worry about. If it disappeared tomorrow, we'd all survive. So Bitcoin's doing what it always does, whipsawing violently and slowly grinding higher. And it's going to grind higher because, again, because it's so small. If as many people wanted Bitcoin as wanted gold, then Bitcoin would have to be $25 trillion and not $2.5 trillion. If the same amount of people wanted Bitcoin, because it is an inflexible amount, there's only 21 million Bitcoins, and there's not going to be any more no matter what. It's just like gold. There's only so much gold in the world. We can't make any more of it. We can't make fake gold. It's a thing that occurs at a certain percentage of the planet Earth's total mineral content, total weight, and there's some gold we haven't mined yet, but we know where it is. There's really no gold left that hasn't been discovered. So that's the key to that. That's why gold is valuable, because gold has a demand for its look and its quality, and also the main reason gold is a valuable metal is because gold can be I forget what the word is, but it can be plated. It can be spread unbelievably thinly, and it still looks like gold. So like a molecule of gold spread across the surface of something still makes that thing look like gold. And that malleable, I guess. That's what makes gold valuable, because you would think there's much more gold in the world because you just see so much of it, but the amount of gold that they actually use when they plate something is an incredibly small amount. And I mean, in fact, I go to restaurants and they feed you gold. They're like, just put it on food, because again, it's such a teeny tiny amount of gold. It's like $10 worth of gold for 4 people to have on their dessert, and they do it as a flourish in some restaurants. But I think it's horrifyingly wasteful, especially when you consider that this is all the gold in the world and you guys are using it on people's dessert. But yeah, if you take all the gold in the world and stack it up, it would be like the size of 2 Walmarts on top of each other. That's like all the actual gold that exists. It would weigh a lot because gold is very dense. But anyway, so it's a choice. But the choice is that 25 billion people believe in gold, $25 trillion worth of people believe in gold, $2.5 trillion worth of people believe in Bitcoin. But as you adapt and as Bitcoin becomes used more and more people, the same kind of people who think gold is a good alternative asset, if they start thinking Bitcoin's an alternative asset, then Bitcoin can double and triple and whatever. It doesn't have to actually be worth anything. It just has to have people believe it's worth something so that they buy it. But does it really have value? No, not at all. I mean, in fact, tell me if anybody has bought anything with a Bitcoin ever. Speak now. Let us know. Or I'll even expand that. Do you know anyone, for a fact, not a rumor of somebody, do you know anyone personally who used a Bitcoin to buy a thing in a transaction? And if the answer is no, then how is that money? I know people who used drachmas. I know people who use shekels. I know people who use lira. I know people who use rubles, yen, yuan. Because you know what? They go on vacation, they go to a country, people accept it as currency, they make transactions. Baht. When I was in Thailand, I was using baht. It's a real currency. People take it and they trade it, and you can buy some food with it, or you can buy a drink with it, or you can get a taxi ride with it. It's used all the time because it's a real currency. Real currencies have real people making real transactions with them. Fake currencies don't. It's a pretty simple concept. And by the way, we also don't run around trading gold. Now, the reason we don't trade gold is because it's a pain in the ass, because somebody's got to test it for purity and measure it and weigh it, and you have to make sure that nobody's ripping you off and so on and so forth. So people don't like to use gold because it's not as secure. A currency is essentially a guarantee. You know what it's worth. And it's still the barter system. I mean, you know, currency is a proxy for the barter system. It's, you know, the doctor used to go to a person's house and they would give him 2 chickens and say, "Thank you for curing my daughter." A milk farmer would give him milk, probably wouldn't give him a cow because it's too valuable, much more valuable than a doctor at the time. And a doctor would have to go around the village and he would perform services in exchange. Somebody would give him some clothes, somebody would give him this. That's the barter system, right? And over time, at a certain point, everybody said, "Whoa, wouldn't it be more convenient if we had these standardized bits of paper that said, this is what a chicken is worth, and that's what a cow's worth, and that's what a doctor's worth, and that's what some clothes are worth, and you need a certain amount of the coinage in order to pay for all of these different services." But everybody basically agreed that the coin was the key principal exchange, and therefore the coin was worth 2 eggs or 1 chicken or 3 gallons of milk or a checkup by the doctor. Those were all equivalent. And that's where money came from. It's just a means of exchange. But you know what it's not? It's not a bunch of ones and zeros that are in your computer that can't even be traded for something. That doesn't make any sense. And if your answer is, "Oh, well, you can trade it for money," it's like, well, that doesn't count. That's money. That we already have money. We don't need more money or different money. So anyway, alternate assets. Now, Another thing you want to see about Bitcoin is here's Bitcoin. Notice the RSI of Bitcoin topped out over 70. 70 is always, RSI is the only real good RSI plus moving averages are the only real things that matter in technical indicators. This is a relative strength, so it's the same thing. It's really just another way of translating the moving averages. But when it gets extended, when the moving average is too far above, like the 200-day crossed over, that's why it's called, when the 200-day crosses under, it's called a death cross, right? That means things are going to start getting weaker. When it goes up, it's called a life cross. But what happens? You get a life cross. We quickly ran into this RSI over here. And although the moving average came up, the relative strength couldn't hold up and we started plunging. And look how fast that came down. We went from here to here. But also, this tells you it was a good time to buy. It was a good time to start buying and accumulating. But we already knew that because this is our 5% rule chart on Bitcoin. And what it says here, I've done this for a big Bitcoin player. But what we did here is we said, well, here's where below this line you want to buy 5,000 each day. You want to accumulate. Above this line, in between these two lines, you want to accumulate 2,500 a day. Here, this whole spot, you don't do anything. And when you get up here, you start selling 2,500 a day. And here, it's not even 5,000 a day. Here, it's like sell as much as you possibly can. That's what this line says. Sell as much as you possibly can. Dump your Bitcoin when you're up here, because this is too high and this is too low and this is your trading range. And we calculated this back in, it wasn't even September. I think we started this in May. But the last time we put it up was September. But, oh yeah, of course it was May. So, but we had put this up in September and it was still on track. And now it's October, still on track, doing exactly what it's supposed to do. Now, you could say that, well, Phil, you gave the chart to some people who are serious Bitcoin players. They're making this happen. Yes, true. Can't help that. You know, it's like when you create charts like this and people actually use them, you're going to make a self-fulfilling prophecy. You're causing the trading range. But we drew this in before the person started buying and selling, so all we're doing is just sort of reinforcing a pattern that was already there. And we might, you know, it's almost at the point where we're considering changing it, but we're still accumulating. These are weeks, these things between the bars. So this week, start out no accumulation. Oh, I'm sorry, small accumulation in here, but not much because it doesn't last. Then full day accumulation, but only 2,500. Then boom. Catch the falling knife. This is a very different kind of chart than we're used to. This is a catch the falling knife chart. Just buy and buy and buy and take all the coins that they want to give you off the exchange and buy and buy and buy. And here you slow down a little bit and you get speed up and you slow down and stop and you wait and you speed up and speed up and speed up. So now you've got 20,000 Bitcoin, something like that, right? From the buying over these few days, and now you want to wait until it hits back here and start selling again. That's all. Just got to be patient. But when you're selling at 122, 124, and you're buying at 108, 110, let's say it's 14. That's 10%. You're making 10% on. So 10% of a Bitcoin is $10,000. So $10,000 times 20,000 Bitcoins, 200 million bucks. It's a good profit. Everything works that way, though. I mean, you just got to look at your trading ranges and figure out where things are. Look at the Magnificent Seven. But what matters is, are you moving along? Are you in a trading range that you can measure and figure out like how much something's going to be? Look at Texas Instruments. Texas Instrument was like this, then it went up, then it went down, then it went up, and now it's down, but it's back, right back in its normal trading range. That's where it was trading. So we talked about Texas Instrument and how they did, which was not particularly exciting. Somebody asked about, RN asked about Clorox and KMB. Neither of those are very exciting, frankly. We did a little look at them, though, to say where they are. See, Clorox is cheap, but it's not that cheap because it's still trading at 20 times forward earnings. It's a boring stock. KMB also. They happen to both be trading at 120 too, for whatever reason, just both in the same place. But there's nothing exciting about either one of these, so they're not something you want to jump on. I got to be in love with the stock right now. With all the problems that are going on, I really have to be in love with something and want to take a risk playing it. I'd much rather have my cash on the sidelines right now. And this was this is Zephyr's morning report, and Marco asked about PayPal, and we had done a big study on PayPal like a couple of months ago, and so we reprinted that, and then we did a fresh study on PayPal. Bottom line is, not interested right now. Here's Warren's morning report. Warren and Zephyr have very different styles for their morning reports, but they both pick up a lot of very interesting information. 8,800 talked about gold, and then we talked about the oil inventory, which I suppose is not helping them right now. Nope, oil's just dragging along at 58.50, basically. Nothing exciting going on there. We got the inventory. There was more of a draw than usual, so supportive of 58.50 for the moment, depending on what happens with OPEC and all that. Then we looked at the S&P. Look what's been going on with the S&P. This is a weekly chart of the S&P. And notice, like, every time, because the RSI is a pretty reliable indicator, especially when you're on the weeklies and dailies. And you've got 70 and it falls off. You've got 70 and it falls off here. You've got 70 and it falls off. You got 70 and it flattens out and then falls off. You have this side, which we never hit the whole time. Now you hit 30, and that's clearly a buy signal. That's really low for the RSI. Now we're back to 70. We had a little fall off, but I don't think that counts. When you look at the depth of the fall off we have from 70, that's not going to count. So it's probably going to be like this kind of situation where we double top at 70, right? 70 and then 70. And look what happened here. We had a little drop, back up, a little more progress, and then a bigger drop, and then really a big drop. And we're expecting this. We're expecting a pretty good sized drop. This is 5 to 6,000, 1,000 points. If we go from 6,700 down to this support, 5,500, that's going to be about the same drop, about a 20% drop. That's what we're expecting. There should be a big pullback. There's going to be some great support, though, because the 50-day moving average moved above the top of our range. That indicates that we may have to draw a new range, and we've had to do that already. We had to do that when the 50-day moving average crossed this range. And once the 200 caught up, we really didn't have much choice, and that's part of it's being caused by inflation, but part of it's being caused by better earnings, and we're going to get to that in a minute. Oh, in fact, here it is. Boy. This thing moved along with some really good logic. So here's Bodie taking a look at the Q3 earnings. This is important because we aren't very far ahead. We're only about 15% into earnings so far. 86% beat. That's generally what happens. 78% 5-year average, 75% 10-year average. So it's better, but it's been 86% for a couple of years now. During this rally, we've had a lot of beating. 84% beating on revenue, also above the average. 85% overall beat rate is the highest since Q3 of 2021. growth, 8.5% growth. But the revenue growth is less than the profit growth. That's not good. You really want to see better revenue growth. And 5-year average, 8.4. So companies are beating by 6. Oh, the surprise is 6%. And then watch sectors. Of course, the financials are kicking ass. Now you got to be careful of this, though, because look, 21.3%. The financials already reported. They're 21.3% up. That means everybody else is performing less. The rest of the growth got dragged down from 21.3 from the financials. Also, the earnings of the financials by weight. And again, that's what I said about before. 23% of what? It's 21%. I mean, 21%. 21% of a big, big number. I don't know the exact number, but it's something you want to break down. The financials make a substantial portion of all the profits. Tech makes the other substantial portion of all the profits. So when they grow 21%, that doesn't leave a lot of growth for everybody else. You gotta always be thinking like how these pie charts actually look. And also they're doing it on, they're outgrowing their revenue by a very wide margin. So they're just making more money. But what does that mean? That means that somewhere someone got screwed, right? The banks are making 21% more money on 7% more revenues. And that means that if you paid the bank $100 last year, they made, well, you don't know what is 21% off, but let's say you gave the bank $100 last year and they made $70. Or let's flip it the other way. Let's say they made $30 last year. But this year you gave the bank $107 and they made $36. So the additional $7 they charged you, all of it was profit. You didn't get better service, you got screwed. You just got charged more money for the same service they gave you last year. That's not beneficial to the economy. Earnings growth without revenue growth means that somebody is squeezing you. And it's not sustainable. You can squeeze your customers to a certain point. Any of you guys who have a business know this, right? You can squeeze your customers, but you instinctively know that that's not a good idea, because when you start losing customers, good luck getting them back, especially when there's a recession on. There won't be another one coming in the door the next minute. You have to keep your customers, not piss them off and have them all walk away. Consumer discretionary. Revenue is up 4.7%. GM had a huge earnings beat. Why? They're selling more trucks. Trucks are more profitable. They started building more trucks, and they caught the right trend, because building more trucks, which are more profitable, and people are no longer trying to buy EVs and hybrids and things like that. All of a sudden, people want trucks again. Oh, by the way, biggest reason people want trucks: 2 million Uber drivers, 1 million Lyft drivers, and they all make more money when they have a bigger car. Although it's self-defeating, because now they pick you up in a big car when you requested a regular car, and they end up charging the regular car rate. But what had been going on, because of the way Uber and Lyft reward their drivers, everybody was trying to get a bigger car. So you just get picked up in these giant cars for Uber trips now, which is it tends to, and see that policy then becomes environmentally damaging. It's, you know, the repercussions of all these decisions are very difficult to gauge until you see them come through, and then they get they can be very nasty when they come back to you. So trucks came back into fashion, let's put it that way, and trucks have much better margins than cars are. Because because in a truck you're not as much trying to save weight, and saving weight's expensive in a car. We still have so many. It's almost silly to talk about earnings when there's so many reports still to come. But you see some interesting things happening. Technology, remember, banking was 21%. Technology is only growing 14%. Texas Instruments just announced terrible earnings. Intel is, who knows what's going to happen with Intel. That's going to be interesting, actually. Healthcare, downward EPS, downward revisions, and Trump is running around talking about tariffing imported pharmaceuticals and things like that. It's a dangerous time for them. Not to mention the government shutdown is going to start impacting the healthcare industry too. They can't lose. You think it's not a big deal. You're like, oh, the government's been shut down for 21 days. For 21 days, people haven't been getting paid. And if Trump isn't going to catch up on those paychecks, and if Trump isn't going to catch up on the payments to all those people, then the landlords don't get paid, and the car payments don't get made, and the washer and dryer payments don't get made, and the couch doesn't get paid off, and tuitions don't get paid. It's a lot of stuff. It cascades. You know, when you don't pay government workers, and again, we're in the top 10%. We're investors. Almost everyone I'm talking to here is in the top 10%. We have money in case we don't get paid. 80% of America does not have any money at all if they don't get paid, and they already have maxed out their credit cards. So it's very ugly. You're hearing these stories about these air traffic controllers. They're calling in sick so they can go work at a job that pays them because they got to afford to live. There's no provision being made for these guys. They're being told you're not going to get paid, but it's mandatory for you to come to work. So what is a person who's supporting a family and has a landlord knocking on their door every day supposed to do? So not only are they doing that, but they're going and getting jobs as Uber drivers at night and things like that to try to bring in some money. You understand that from a human point of view, but from a guy in a plane point of view, I'd like my air traffic controller not to be half dead asleep from working 2 jobs. I mean, there's an argument there that we should be paying him properly anyway. But this isn't, you know, the strike's not a strike. The government shutdown isn't about whether you pay an air traffic controller enough money. It's something we need to think about. But the shutdown is about all kinds of things, including healthcare. So of course, healthcare is worried. Consumer staples, or you know, we looked at Kimberly-Clark and Clorox. There's not a lot of money in there. People are cutting back and going to cheaper brands and whatever. Materials, we're not particularly booming and building and expanding the economy, so that's not good. So the Magnificent Seven are growing at 14, 15%. The rest of the S&P, 6.7%. That's not a healthy economy. Let's see. So beat rate high, magnitude low. Companies are sandbagging, lowering guidance successfully, then barely exceeding. Classic late cycle behavior where CFOs guide conservatively to ensure beats, not because business is strong. High beat rates with low surprise magnitude is a topping process. It is not acceleration. The revenue growth is slowing. The margin compression is hidden in the beats. So they're beating on earnings, but the margins are still compressing. The guidances are generally weak. They're giving positive guidance, but it's slowing down. Everything is slowing down. Financials are masking everybody else's weakness. That's very, very true. What to watch in upcoming reports is useful. So Tesla, if they can't do well after what GM said, that's true. They're going to be in big. Now Tesla should do well because they have a lot of what they call pull forward orders because the $7,500 credit on Teslas was going away and everyone knew it. So last month, everybody ran out and bought EVs ahead of the change of the payout. But the question is what's going to happen the rest of the year. IBM, I'm not worried about IBM, frankly. AT&T, subscriber churn, and of course, again, bad economy. So people are listening to those T-Mobile ads and things like that where they say they can save you money. But I think the overriding story here is the fiber build out cost. the cost of 5G is going away, and now they're going to start raking in the money from 5G instead of spending the money. Thursday, Netflix missed. I mean, come on, Netflix missed. That's not good. They guided down on margin. There's just this streaming thing. I mean, I don't know. Disney just raised their prices. Warner Brothers raised their prices. I don't know. I think people are going to start cutting. I think people are going to start actually choosing which companies, and that's going to make for some big winners and losers in this race with the streaming services. Intel has had Intel's been huge this year. This gigantic pop from 20 to almost 100% gain, and that's on a $170 billion market cap. So they gained $80 billion in market cap this year after doing nothing forever. We've been buying them. We've been accumulating down here, but there was a much longer wait than we thought for them to pop. But they finally did pop, and but anyway, I mean, they're a huge contributor to the indexes, and honestly, they're in a long range trend. They're still at 52 times earnings. And Verizon also, both, you know, Verizon and AT&T have a lot of competition, and it's going to be tough for them. Plus, there's the upfront expenses of the Apple cycle. So Apple, you know, they've got to buy and commit to these Apple iPhones in the new thing for Christmas time, and that's a huge outlay for them while they wait to get their customers to switch those phones. And next week we get a lot of Magnificent Seven stocks, so that'll be fun. We'll get to have an idea of what's going on. Could earnings derail the rally? Not likely. Most likely we're going to do okay. The 60% chance, according to Bodie, that we're going to do okay. We're only hedging for a 20% drop because of what we talked about on the S&P before. We don't, you know, because there's a lot of support there. Not that we don't think it can fall. We could easily fall 33%, but we don't think we're going to go blasting through 20% that we have to worry about it. We'll just add hedges as it goes down. So then after that, I had Anya take a look at it. Anya's much deeper thinker than Bodie is. She's one of our smartest models, and she was looking at it to say, she's coming in like a teacher. She's like, oh, let me take a look at this thing. Let me see what you guys came up with. And she's saying the technical setup, your identification RSI, the elevated MACD, warning signals is spot on. Bodie's deep dive confirms what the market action is doing, the high beat rates, low surprise magnitude. It's not very different. It's distribution masquerading as strength. And then she's saying, here's critical additions. The government shutdown is a wild card. The BLS is calling back employees to release the CPI report. Now, why is the BLS calling back employees to release the delayed September CPI report? Because it's Trump's BLS that he replaced the people, and he's going to damn well get a good number out to justify the Fed lowering rates. That's what this is all about. I mean, do you think Donald Trump is scrambling the BLS specifically during a shutdown in order to get a bad report out there? No, that's just not happening. So we know why they're doing it. We know it's going to be a low number. So if CPI validates more aggressive rate cuts, that's the only reason they'd be doing this. I mean, if that's not why they're doing it, could you imagine how incompetent they are? This is on the 24th. The meeting of the Fed is on the 29th. They need a reason to lower rates, and the CPI is going to give it to them. That's what they're going for right now. It's in 2 days. It's on Friday. So then we have next week the Fed meeting. which I apologize that I won't be around, but I'm not going to be around. I will chime in from my trip, but I will not be available for the webinar for sure. Best case, Fed cuts Magnificent Seven melt up. Worst case, any Fed disappointment could be a real tragedy. So we have to be real careful about what happens next week. The markets are whipsawing on trade announcements, which is exactly what they're doing right now. Although, as I just said, I don't think the software merits such a big concern. And the margin compression from the tariffs is starting to show up in guidance. The Netflix miss is a bigger deal than it seems. Netflix blamed Brazil tax issues, and that's bullshit. It's only $600 million. It's not like life and death for them. Speculative areas of unprofitable tech have already fallen 20%. You know, it's again, their streaming service. All the streaming services are going to start losing people because it's just getting to be an unnecessary expense that people can cut. And again, it doesn't sound like a lot of money. You're like $15 for this and $10 for that and $20 for that. But there's a lot of people who are trying to keep the lights on, and it does matter to them. And they do say, do we really need to have Netflix and Hulu and Time Warner and CBS and NBC and ESPN? You know, 2 of those got to go. That's your family meeting, right? 2 of those got to go. Everybody vote. Everybody decide what we're going to keep. You know, and Dad says, screw that, I'm keeping ESPN or whatever. And if you have a young family, yeah, that's a great bundle for Disney, right? They keep the sports for Dad and they keep the Disney for the kids. So that keeps them in pretty good shape compared to others. You know, and HBO, is HBO really worth keeping? With that, I think HBO is great, but you know, and Showtime and Discovery, and it's too much. Do you really watch all these channels? I sure don't. I subscribe to them. I seriously could lose half of my subscriptions, and I probably wouldn't notice. And I think, by the way, what you should do is only subscribe each quarter. Have, you know, change your subscriptions each quarter so that you don't have the same subscriptions on every quarter, because, you know, instead of switching to one thing to another, just watch all the shows on one network, then be done with them. Move to another network, watch all the shows on that network, and be done with them. And by the time you cycle back around, they got new shows. But why have 4 channels of 4 different streaming services with shows you don't watch, or that you don't get to because you're, you know, trying to watch them all? So payrolls, we have no idea what's going on with payrolls. She likes our positioning. That's good. Her recommendation is monitor the CPI, see what it looks like, watch Tesla carefully. Next week, got the Fed decision, got the GDP report. I don't know if we're going to get that or not. The 4 of the 7 are going to report. You know, we'll keep an eye on the technicals. It's going to be a bit crazy. Oh, I'm on whatchamacallit, Money Talk next week on Wednesday. So Wednesday night, 7 o'clock, I'll be on TV on the Money Talk show. Tuesday, we actually record the show. And like I said, I'll be on a boat on Wednesday, so I'll be missing in action. No webinar. I'll be on until Monday, so Wednesday, so Thursday, Friday from the boat. Probably a morning report only, and that'll be it. And then Monday we'll be back, so Monday morning at least I'll be able to do something from the hotel we get to. And then Tuesday is back to normal next week, the week after next, sorry. And the Congressional Budget Office estimates each day of the shutdown means 750,000 workers are furloughed with $400 million in compensation costs, and Trump may not give it back to them. And that would be a disaster, because not only, because who cares that the federal government saves $400 million? It's not significant. What is significant, though, is these people whose entire lives are impacted by not having a month's worth of money to pay rent and pay cars and pay this and pay that. And then the knock-on effect of all these people who don't get paid for the month or delayed or have people run into default, the credit card companies that don't get paid, and suddenly it hits the banks and they have to write off on their balance sheets. It's not nothing. It's much easier and much smarter to pay the frickin' people what you're supposed to pay them. By not doing it, you're just causing a cascading issue in the economy that goes on for ages. But she's saying it's a tail risk. It doesn't justify more hedging, but if we start seeing signs, then we got to be aware of it. So it does justify watching carefully. And that's where we are. Things are going to be crazy. And, you know, and this random, you know, like tariffs on, tariffs off, this and that, that's not healthy at all. So it'll be an interesting couple of weeks. I didn't think I was going to be planning my trip with my girls around. I thought Halloween would be nice and quiet, frankly. I didn't think it was going to be a time when it would be a crazy market, but it's always a crazy market with Mr. Trump. So unfortunately, that's just the way it is. So thanks everybody for coming. I appreciate it. I will not see you next week. I will see you the week after that, which will be God knows when. November 5th. All right, so skip and morning report, but not much else. And by Monday, morning report, but I'll be around a bit. And then Tuesday, we're back to normal. And then Wednesday, we will do that webinar. All right, thank you everybody for coming. I appreciate it and have a great weekend. Take care.